Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an initiating coverage. Our analyst has a positive view on Suraj estate developers, given more than 25% discount to NAV valuation and stellar growth prospects in redevelopment space. The company reported sales booking growth of 37% year-on-year and 67% quarter-on-quarter at Rs 143 crore for quarter 3. It reported strong operational performance for quarter 3 with consolidated revenue and operating profit growth of 2% and 10% quarter-on-quarter with operating profit margin of 65.7%. Its ongoing and upcoming project portfolio of 1.35 MSF saleable area is likely to generate operating surplus of over Rs 3,100 crore over next 5 to 6 years. Land reserves have GDV potential of over Rs 2,000 crores. It has significantly deleveraged its balance sheet post FY23 with IPO proceeds and healthy collection. It is now embarking on asset-light redevelopments with more than 19,500 redevelopment opportunities in SCM. Next we cover Indigo Paints. Our analyst retains buy on Indigo Paints with an unchanged price target of Rs 1850. Quarter 3 numbers were strong with revenues and PAT rising by 26% and 43% respectively. Operating profit margin rose by 317 bps to 17.6%. Revenues grew by 3 to 4 times ahead of industry growth rate for the third consecutive quarter, indicating consistent market share gains. Waterproofing and construction chemical products is getting strong traction. Sales growth in Tier 1-2 towns continues to outstrip Tier 3 and 4 towns and rural areas. It target revenue of Rs 1350 to 1400 crore and operating profit margin of around 19% in FY24. Stock trades at 44 times FY24, 37 times FY25 and 32 times FY26 estimated earnings. Next we cover PI Industries. Our analyst maintains buy on PI Industries with an unchanged price target of Rs 4,000. We expect PI's revenue to post a strong CAGR of 19%, EBITDA 20% and PAT 21% CAGR over FY23 to FY26, led by robust CSM order book, ramp up of 9 new products commercialized in the last 1 year and the launch of new products in FY24. Quarter 3 adjusted PAT grew by 13% year-on-year to Rs 379 crore, which is in line, led by robust growth in CSM business, beat in margin which offset subdued domestic business performance. Management has maintained revenue growth guidance of 18 to 20%, including pharma, for FY24 and believes 25 to 26% to be long-term sustainable operating profit margin level. For FY25, management plans to incur capex of Rs 800 crores and plan to spend the funds on capacity expand, new technologies, capability building and R&D investments. Pharma foray would diversify earnings stream and drive meaningful medium to long-term earnings growth. Additionally, surplus cash of Rs 3,296 crore will help pursue organic inorganic growth opportunities. The stock currently trades at 24 times its FY26 estimated EPS.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.